You're listening to REIA Radio, the nationally trusted name in real estate investing. We dig deep to discover investors' why in real estate. If you want to skip all the BS and get in investors' heads, you're in the right spot. Be one of the thousands to check out REIARadio.com. Welcome to the Real Estate Rundown. This is REIA Radio, and I'm with Owen Dashner and Ted Kaasch and Aiden Bear. The Bear.
Manning the electronics over there with his hood on because he's not so proud of the haircut that he just got, which knocked, we feel, about 10 years off of him. Aiden, do you want to pop in the camera and show it?
But his front profile is like a whole new man. I mean, I thought he was Iron Man,
Tony Stark with different glasses on. Yeah, that's what Aiden's rocking today.
I think Aiden just thought that maybe if he just does a new fresh look, that the ladies are going to start.
He's on patrol, ladies.
Yeah. So if you're one of the 50% of our listeners that's woman and you're single and you're looking for a young man, 23 years old,
mature looking young man,
very mature looking young man, like very, very mature. But he looks a little bit younger now.
He is bright red right now, even though he's not on camera.
He is available.
All right, enough about Aiden. What's going on in your world, Ted?
Oh man. Well, first off, I'd love to bring up the fact that we have Colin Schwartz next week, and the fact that Colin was originally episode 16, and funny enough, he is our 6th highest rated podcast that we have ever had.
Yep. So we're trying to we got to boost those numbers up. Those are rookie numbers. So anybody wants a little precursor to the Colin Schwartz show, go ahead and tune into episode 16. Download, like, and subscribe. And share, by the way. Share these bad boys with people that you love and would love real estate investing.
And we love those 5-star written reviews.
Yes,
we love to read them.
Yes. And we will do that at the end of this, right?
Yes,
we have some of these in the hopper. So
we got 3 of them to read.
That's right. All right. So Teddy ball game. What was your week like, my brother?
Well, it's been interesting because I was looking at my Airbnb calendar on the start of April. First off, let me back up. I think I got 7 Airbnbs going right now. And I was looking at last month. And last month I had 83% occupancy, which is
crazy high.
Right?
Is it like 50%? Is that kind of normal?
Yes,
normal?
Totally. And, like my higher in-house is generally only booked on weekends.
Mm-hmm.
But I've never had an open weekend before. And so now I'm looking at the calendar and I'm just like, come April 1st, I had 3 bookings, a 2-day and 2 1-days between all my properties combined. And usually April is like the start of the busy month for this area.
Mm-hmm.
And I'm like, what is going on here? So I'm like, I start price slashing, like half price, like on everything. Like, because you got to have some bookings and you need income coming in. Plus, you want bodies in there just so the place doesn't get broken into or something, right?
All right.
And plus, we get more reviews, get more love, and then hopefully bring more business. But so I started slashing prices. I'm starting to get like a couple fill-ins. But then I was listening to the news and they were talking about the airline tickets and how airline tickets have just plummeted, and partly because of all the crashes and the publicity that's getting.
Not airplane crashes.
Well, there's been a lot of airplane crashes.
Is that what you're talking about?
Yes.
Okay.
But
I thought you meant the stock market.
But then also the stock market's been really down. Well, we've been up and down. It's been a roller coaster, right? It just depends on what gets said and coming out of the White House that day, and everything goes crazy. But I am thinking that due to the economy and the fears that people have, people are not booking. I've had probably about 5 or 6 cancellations this month. And I don't think I've had 5 or 6 cancellations in the last year.
So what's your hypothesis on that?
I just think that people are scared of the economy. Maybe they're like, hey, maybe we shouldn't do this trip. Maybe we shouldn't go on a spring break event. Maybe we shouldn't go to the zoo in Omaha,
Mm-hmm.
And, people are just kind of like holding back. Maybe there's a little bit of scare and they just want to keep a little bit extra cushion in the account.
It was interesting watching stock and bond markets. Probably a whole bunch of other stuff has happened by the time you're catching this episode. But this week we had basically 10% of the entire stock market was wiped out in about 3 days. And
wasn't it like $3 trillion or something?
It was a huge number. And then all of a sudden, Trump announced that he was putting a 90-day moratorium on the tariffs that were enacted across the board. And then the stock market had almost a historic rally. It was like the second all-time single-day gain in the stock market's history because of that. So it just goes to show you, like, sensationalistic news can really, make a huge effect on the capital markets, because it's like daily. You have to pay attention to this stuff all the time. But for those that are in, say, the later stages of life and they have a lot of their money into 401ks, retirement accounts that they're going to have to start tapping into, a lot of those people are concerned about preservation of capital more so than they are growth. But I mean, let's be honest. I would bet you that large portion of retiring Americans probably are way overweight in growth stocks and those type of assets that are more tailored toward people that have a long window ahead of them before they are going to hit retirement age. And the problem is kind of exacerbated here. It's a weird time because what has happened is, there's all these tariffs enacted, and China's got a big old bullseye on them from the current administration where they're just tariffing the hell out of them and they're retaliating. So every time this happens, it's like tit for tat with the tariffs. One thing that China did that made a little bit of headlines, but I think it really got lost in the noise of this past week, is they sold off $50 billion worth of bonds, U.S. bonds. And that means typically if there is less demand for U.S. debt, which is, let's face it, how we fuel our economy, then that means yields on. So bonds are inversely proportionate to the demand. So the more demand there are for bonds, the more the yield goes down. And the less demand, it goes back up. So like the 10-year treasury, which is basically the financial instrument that's most closely tied to mortgages in the United States. The 10-year treasury went down pretty significantly in a short amount of time to like in the 3.8, 3.9 range. And then what happened after the market spiked in the China sale of all of those bonds, the bond yield went way back up. It's like 4.5 as of today. So it almost came back to exactly where it was. So this ended up being kind of a nothing burger because the huge loss got offset by the huge gain, but then we also had the net effect of the bond market in there as well. Pretty interesting time. So it kind of counteracted what you would intuitively think is going to happen after a huge chunk of our U.S. assets have gone down, right?
And I was just looking up because I was wondering, but China is holding $750.2 billion in U.S. bonds.
Yeah, I wouldn't be surprised if we see more selling off of that because they're retaliating and saying, and here's also what's happening. The U.S. dollar is losing its value versus a basket of foreign currencies. So it's down to like 1.03, I think, or 1.02 value for value. And that means that less countries have demand for the dollar, which can be, exacerbate this problem that we're having with this. So it's a huge seesaw in the market right now with, a lot of times what happens is if institutional investors that own a big chunk of, the worldwide and especially the U.S. economy or the assets in the U.S. economy, if they start selling that off, typically they're going to shift it over into bonds. And normally the yield will get driven down because of that. But that's not happening. So that tells us that maybe they're looking for other places or they're just keeping it in cash.
Well, they've been talking about
that's a problem.
They've been talking about crypto, could kill the U.S. dollar.
Who's been talking about that?
Well, I've been hearing that on the news about, it's because the U.S. government and Treasury said that they're going to purchase crypto, and I don't remember the
strategic
amount.
reserves is what how they couched that.
And that was going to give more value to Bitcoin specifically.
Mm-hmm.
And because of that, other countries will look to that as a source other than the American dollar.
Having participated in the crypto world briefly as a completely uninformed newbie and losing a lot of money in it, I just think crypto is like I don't know. I'd probably get some hate for this, but I think it's a Ponzi scheme, honestly, or something related to it. It's just like people are excited about it. They're hyping it and they're saying, here's a perfect example, like Haktua girl.
I know that
started a meme coin,
yeah.
Pumped it up and then dumped it immediately after. So what is it? What's the value in it?
I don't understand all the other coins, but obviously Bitcoin has played a big role. I think during the downturn this week, it hit a low of 73,000 and then I peaked at 86,000 within 5 days.
Yeah, it's big seesaw. I look at that as gambling, honestly. I look at that as it's like focus on safety in your portfolio first. So you get your insurance and 6 months worth of savings in place. Then you maybe, focus on your retirement accounts, then your kids' college education, maybe health savings account, things like that. The further up that pyramid you go, the more risky you can get with your bets, because, you have your safety taken care of. Then you can look at growth, and then you can look at the very top of the pyramid. That's what I consider like your disposable money, your gambling money. And if you want to take more risky bets like investing in crypto, it's so hard to gauge that, because you'll see people that think they're experts in that space, and then all of a sudden it'll just lose 10% one day for no particular reason at all. That tells me like what is really going on there. It's really subject to market manipulation a lot, but I don't know nearly enough about it to make an educated tirade about it. But here I am. That's why I'm on a podcast, not the news.
Yeah. Well, we kind of switch topics. If you guys got some feedback on it, please reach out to us, DM us on our Instagram, REIA Radio, or Owen Money Real Estate, or Kaasch Money Real Estate. Kaasch is Kaasch Money.
I know you want to be like me.
Yeah, Kaasch Money Investing is what I think is my LLC there. But reach out to us, and we'd love to hear your take on it. And we'd love to know what your Airbnbs are doing right now if you're seeing some struggles. But I do want to switch a little bit to your caffeine cap rates event, which is sponsored by Liquid Lending and REIA Radio. And we would love to, talk a little bit about the topic that you had just yesterday. I thought it was kind of an interesting topic that you were having. Owen's got a local meetup here in town that he started, and he most of the time hosts, unless he's out of town, and other people come in as guest hosts. And there's been some fun topics. I remember last week we were struggling with the potential of having Brandon Turner come speak in at our local group, and we got some consult from the members on what to do. But your topic yesterday was really interesting. Can you explain what the topic was and what maybe the most interesting conversations you had out of that work?
Yeah. So what Ted's talking about, we brought this up before on the podcast, but it's a local coffee meetup group. It's at Sozo Coffee, 1314 Jones Street, every Thursday at 10 a.m. So locals, please join. Would love to have you, especially, if you've never been before. All are welcome, all experience levels, all that fun stuff. Yesterday's topic. So I like this event in particular because it gives me free reign to just come up with whatever the hell I want, which is nice.
It's you.
Yeah. So I get up and I'll do research and I'll figure out a topic that interests me for that day, and we'll typically dig into it. We've done really deep dives into underwriting multifamily stuff. We've talked about like general problems in your business, and it's kind of like a mini mastermind because a lot of regulars that go to that group are super experienced, and we have differing opinions on things. It gives you more of an intimate setting where you can dig deeper into topics that are current for you, right? Not just like, you go to a meetup and they're talking about taxes or an attorney or whatever.
So what was the topic yesterday?
Topic yesterday is failing forward. Is that why you brought this up?
No.
Little tie-in.
No.
So failing forward, and this is, if you listen to the show, we always do a failing forward with our guest each week where they talk about a situation that happened, and usually a deal, maybe a business or life event that happened, didn't go according to plan. And more importantly, what lessons did they learn from it? And that was the initial focus of the conversation. I honestly was not anticipating it to take as long as it did. We were there for about 3 hours, and probably the first at least hour and a half went around the horn. And basically we talked about a failing forward that happened for each person in attendance. And then we dug a little deeper into each of those situations and said, okay, what happened in your situation? They explain it. And then we're like, okay, what is the takeaway here? And what was the root cause of the issue that happened? And I kept track of those as we went around the room.
I took a picture of the board.
Yeah, on the whiteboard. And
without name dropping though, what was some of the things that stood out in your head?
Yeah, so one in particular that somebody we both know really well brought up skin in the game and partnerships, and how this person unnamed may rhyme with smash as far as the name goes.
It's me.
Yeah. So Ted brought up he's talked about this before too, but basically partnerships he's been involved in where he has been on both sides of the fence. So he's either been the money guy or the sweat equity person. And there's a disparity a lot of times in partnerships like that, where you'll have somebody that has the money and they basically don't do anything else, and they're like, go get him, Tiger. And that puts all the onus on the person that is supposed to be operating the business. And if they're not also bringing in money and they just aren't able to perform on the business plan that was agreed upon, then that puts the person that put all the money into it at a huge risk. Because what do you have to lose if you're the sweat equity? You don't have any money invested, so you're just like, okay, this didn't work.
I've been in that so many times because I've been the go guy, like the guy that's getting it all done, running the business, doing the day-to-day operations. Specifically when I was younger and I didn't have a cent to my name.
Yep.
But I had a ownership title in those companies. But that ownership title didn't mean shit to the person that actually put the money in.
Right.
You know,
you always feel like they have something over you, right?
Yeah, and so each one of those businesses, I was like, hey, take my profits and put it back in investing. And I remember I had a limo bus company. I kept investing my profits, kept on buying more buses, but I truly didn't have cash into the deal. But I did. I mean, because I was 50% of the company. I ran everything. I did every booking. I oversaw every deal. I built the whole business. But in the end, the whole business got taken away from me. I got no sense out of the deal, but walked away from it. And that's happened so many times.
So I'm going to dig just one layer deeper on this and say that I've seen this happen a lot where you have a money person and then you have the sweat equity person. And then in cases where it actually works out, what generally happens is the person doing all of the work, if that's how the business is set up, it's just you have money, I have skills and abilities, and the skills and abilities person, if they are able to make that business successful, a lot of times there develops an ongoing resentment of the person that put in the money because they own 50% of the business. And they're like, what the hell did that guy do? I'm doing all the work and he's taking 50% of the profit. Because they're forgetting about what happened in the beginning when they had no money or maybe some money, but that wasn't what they were bringing to the table. It
never happened without that
person. And so over time, I think that situation where you have basically a seesaw on who has skin in the game, one up, one down, like the fat guy analogy I made last week, that develops. It's like having a sandburr in your shoe, over time. Like people get to a point where if they're just doing the sweat equity part where they resent the person that had money. And the money person's like, what do you mean, man? This is how it was supposed to go. Yeah. Like this was the plan.
Yeah.
But then they end up separating, and a lot of times that can kill a friendship.
Yeah.
Or a successful partnership just because of that reason. So your point in that, and the thing you pointed out was, it's important for you to have skin in the game and the other person have skin in the game, where that type of resentment, it's not as prevalent in situations like that as it would be normally.
I had
it was a good one. I mean, that's a real thing. It happens all the time.
I had somebody, and I know they're listening to this podcast, so there's no shade here at all. But I had somebody reach out to me, and I want to do storage units, but I need to sell some properties to be able to provide my skin in the game. And this person's like, which is a great person, said, hey, if you want to get into that, I'll back that. You run the deal, you find the deal, I'll back it. And I'm like, you would be great to work with, but I'm also like, I get PTSD when it comes to that.
Yeah.
And it's like, I would have to sell some stuff to be able to do that.
Yeah.
And just because I can't do it, I just can't. I just don't think I can.
Yeah.
But that also got my kind of head turning. And actually, when I was meeting with my business coach, Jason Dries, earlier this week.
Good name drop.
Yeah. When I was meeting with him, I was discussing things that kind of moving forward. And I'm like, hey, I think that I would be really good at capital raising. And I go with I
think you would too.
I got a lifetime of sales experience. We have all these avenues that we are both in, and people know, like, and trust me. But I also have opportunities to do it for people that have companies I trust. And then Jason's like, yeah, that's an absolute no brainer,
right?
And he's like, yeah, you should be all over that. So I'm trying to think, like, where do I start with doing something like that? And that was kind of actually one of the topics on my list today is like, if somebody wants to get in capital raising, not specifically me, but like, where do you start? Like, do you get behind somebody? Do you do you call somebody that does it and just, hey, can I shadow you? Like, I don't even know where that, especially if it's working for, let's just say it's your company or one of your companies that want to raise capital, and you got a potential capital raiser you can bring on. Let's say, and just hypothetically, it's me, and I'm going to go raise capital for your company, but you have other capital raisers that you work with. Do you have that person shadow them for training? Is there some knowledge you should go out and get? I met a lot of capital raisers, on here, but I've never inquired on it.
Okay, this is my standard asterisk that I always do. I am not an SEC attorney. I'm not any of the qualified, certified people.
And this is a hypothetical situation.
This is hypothetical. Yes. Hypothetically, if someone wanted to get into capital raising, here's what you can expect out of this. So if you're dealing in, let's say, this is real estate we're talking about. So let's say these are syndication groups. They make their business model around going out, raising capital from high net worth individuals, family offices, etc. And they take that investor money and they pair it up with real estate investments. And in return for that, they are providing the acquisition, the asset management, the construction, the overall property management, all of those things. So they operate the business, and a typical split is going to be 70-30. So 70% goes to the investors, 30% goes to what's called the GP or general partnership group. So people that brought the deal to the table and are going to operate the business plan. And enter a person whose job is to raise capital for that business. Now, again, I'm not involved in the legalities of the SEC, but there are parameters around how and who can get compensated for raising capital. And typically, the person will need to be a part of that business, not just a one-off. So if you were like, Ted, you went out and raised $1 million for a hard money fund, let's say, or a syndication business, typically there are things that may prevent you from being compensated just for doing that deal as a one-off. And the SEC has guidelines around it. Now, are there ways you can make that work? Absolutely, there are. You could be, and again, I don't want to get into the details here, but you could be an employee of that company and somehow.
I guarantee there's so many people that are wondering about this.
Yeah, I love this for you, by the way. Yeah. We have not talked about this much.
We've never talked about it.
I think you would be a great capital raiser with how disciplined and with appointments and all the people and all the people that don't have the time to look for deals. If you can match them up with people that are really good operators and they make deals, or maybe the people are just high net worth, they sold some stuff, they don't want to put money in the stock market, you could say, okay, why don't you invest in this hard money fund, and you can make 8 to 10% interest depending on the amount you invested. You just get mailbox money and do your thing.
And this is
I love it, man. I think it's great.
And this is something that, if I really take this on, I wouldn't feel awkward going in front of our REIA group and saying that this is what I do versus like saying I'm a realtor.
Yes.
Like, 'cause I don't go in front of our group and say, hey, I'm a realtor, but I could go in front of the group and say, hey, I'm a capital raiser. If you want to find different ways to invest your money, I can help you with that.
Yeah. And the cool thing about you in particular is you have this funnel, right? You have a funnel of all of these relationships you've developed over the years with business owners, wholesalers, all kinds of different real estate folks, and all the businesses you've owned and operated. And you are now a conduit to alternative investments outside of the stock market. So people that own a whole bunch of real estate and raise money from private investors, just like we talked about. Hard money business owners. So you can allocate capital into one thing. And if you're going out, as you, Ted, like we're talking about, if you go out and you're like, hey, if you meet with a friend and they're like, I just sold a business, or I just sold a property, or I just sold some stuff, and I have $1 million or $500,000 or whatever it is, what can I do with this? And you could then say, hey, you know what?
31 that.
Yeah, you could put part of that into a hard money fund. You could put part of that into a syndication. You could JV with this person, blah, blah, blah. I love it for you. I think that's a good way to make some good money for you, because a lot of times it's a thing where you get, for the amount of money you raise, you get a 1% commission, 1 to 2% commission, depending on who you're dealing with and what the structure is and how much it is, right? And sometimes you can get that in perpetuity. So as long as the money stays in, almost like an asset management fee that you might get from, being a registered investment advisor, say. And there's other options like that. Like you could go out and call on registered investment advisors, and you could say, hey, I have these other, I have these real estate deals or these funds. Is your family office interested in placing some money here? You could do all kinds of stuff like that. We're looking for that type of person in our business right now. But I don't know that we're... well, we can talk about this offline, but we can dig into this more. Well, I love it for you.
My next move was to reach out to Jason Belt. We have him on the podcast and just pick his brain, get some advice, and go from there.
Yeah. No, I love it. I love it, man. All right. This is exciting. I was not expecting any of this.
So, hey, the last thing I want to bring up on my list is I want to give a shout out, because people give us shout outs and it does great things for us, to Andrea and Axel Foley. They started their own podcast called Golden Acorns.
Golden Acorns. Okay.
Did you listen to their first episode?
I have not yet. It's on my list.
So I hope Andrea's listening to this. So on her first episode, they explained why they called it Golden Acorns. They explained that Andrea said her most despised phrase of her life, kind of like you have your phrases,
yes,
is golden nugget. And she can't. She says, in her podcast, she's like, I can't stand the word gold nugget. I hate it. It makes me cringe.
I did not know this.
And so I was just laughing because you guys are business partners, and I thought maybe you could have some choice words with her about this. But just so you know. But yeah, I just started listening to that one, and they're just getting started. So I hope the best luck to them.
Oh yeah, well I don't like the word acorns, so there you go, Andrea. Suck it. All right. Well, speaking of golden nuggets, how about we talk about today's golden
nugget, Andrea?
Okay. One thing I wanted to point out. So, kind of like, referring back to the caffeine and cap rates meeting that you mentioned, where we went through the failing forwards. We also talked about your like worst deals and stuff like that. And the one I brought up, and I don't remember if you were there at this one. I brought up one specifically about termites, and it was like one of the worst losses I've had.
You brought that up on the podcast before, yeah.
So lost like 40 grand, and I knew it instantly when I walked into the house, and basically it was a result of my lack of due diligence on the property, because it wasn't like Brandon and I had just gotten together.
How much shit did Brandon give you?
He found it.
Yeah.
And I never went through the house. Okay. So he's the one who locked it up, got it under contract.
So it's on him.
It is, but he was just starting. It's on me because I didn't go to the meeting.
I love to see how that conversation went between you two.
He felt horrible. I mean, he was so nervous, and like, I mean, imagine like you just lost your business partner 20 grand.
The first time we get him in here at the table, because it will happen. It'll be the first thing I bring up.
Yeah, no, he felt like lower than low, and I'm like, look, man, they're not all W's. I pumped him up because I was like, this could have easily happened to anybody, and I wasn't there with you, so it's on me.
It speaks volumes on who you are, though.
Well,
yeah. I mean, because you did though, because you really could have just been like, dude, WTF, man. What did you do here? You could have really taken it to the next level, but you probably saw the value in the partnership and what you guys do and bring to the table. Plus, you don't usually stress out about a lot of stuff.
Well, I know he was.
He's stressed out about different things, but not money and business.
He felt so bad and he felt so guilty about it. And I'm like, dude, like, I've never made a mistake. Are you kidding me? The only reason that exact thing hadn't happened to me is only because I was a lone wolf for so long, and I was making my own mistakes along the way that nobody else saw. You know what I mean? So I could just eat it.
I know exactly what you mean.
Yeah. So, but, okay, this is funny because this was just yesterday. We had this deal where I'm describing the termite thing, and it was like ridiculous amount of termites. I mean, it was crazy.
Swiss cheese. This is another deal or the same deal?
This was the deal that I'm describing was the deal with Brandon.
Yeah.
Today.
I thought this was a long
this
time
morning.
ago. Okay.
This morning. No, that deal happened with Brandon a long time ago. This was like 5-6 years ago.
Yeah. Yeah.
Today, I feel like I just manifested termites into my life by speaking them out loud.
I'm sorry.
Because I was at the gym, and Chris, our shared handyman that we're using right now,
one of our top 10
that's right
interviews.
So Chris is texting me like a million messages at the gym, and I'm like, dude, I'm busy, man.
He's good at that,
and he sends he's sending me all these pictures and stuff, and he's like, so the deal is this: I had a rental for a long time. I had it for probably 12-15 years, something like that. Had some little old ladies that were renting it. They moved out recently, and I'm like, okay, I'm going to fix this up and I'm going to sell it. That's likely the plan. And it had paneling on all the walls, right? Like all of the interior walls had dark wood paneling. And the only reason I kept it is because they wanted to move in. They were living in another rental of mine. They wanted to move. And
you want to get them in
quick.
Yeah.
I was like, okay, I mean, if you guys will take this as is, like I'll cut a little off your rent, And they're like, yeah, we'll take it. No problem. So I just didn't even touch it. They moved in. I hardly put anything out of pocket. I bought that house for 45 grand, the one I'm talking about right now. This morning, he's like, hey, man, I tore down all that paneling. I think you have some problems with the framing. And I'm like, oh, God, what? And he's like, it's termites. And he's sending me all these pictures. I'm like, all right, hang on. I'm like, I'll be there, because I was working out a few blocks away. And so I go over there this morning, and there's one wall where like all of the interior framing is just Swiss cheese, and there's termite tunnels everywhere, and now it's up in the ceiling area. So I'm like, oh God, is this in the rafters and all that stuff? And so I'm like, oh my God, I totally just screwed myself by speaking this into existence yesterday with this whole story about my termite loss. But anyway, so today's golden nugget is long-winded here, but don't do what we did on this and miss signs of termite damage. And here's what you can look for. If you've never seen these before, here are some key signs that if you hired a pest control company to do a termite inspection, this is what they're going to look for. And I'm going to see if you know some of these, Ted. So the most telltale sign is generally going to be tubes. It looks like mud. So they're little, probably 1/4-inch size tubes that go usually along wood, because the termites will eat the wood and then they'll excrete out, their poop, which is called frass. Fun fact for you there.
I didn't know that.
And it looks like sawdust, more or less. And so these are tubes and tunnels that the termites make as they go along and they're demolishing your house. And other signs can be like, if you have, and termites love like wet wood. I don't want to say the word, the M word.
Wet wood.
Yeah. Well, I was going to say moist, and I just hate that word in general. So,
but is wet wood any better?
If it's really not, but if there's some moisture that has, gotten some framing wet or some wood or drywall, termites like that because it's a lot easier to eat. Right.
Yeah.
And they'll go through and just plow through framing and houses. And you'll see these tunnels, and a lot of times it hides behind the drywall, so it's not always easy to suss out. But if you look in places and you see tubes, go in the basement if it's unfinished especially, and you can see that. Make sure you look along the ceiling and also along the framing on the walls. But other things will be like, if you have drywall up and you see, and it's wallpaper, and you see like bubbling or kind of like, soft spots in the wallpaper when you press on it, that's another telltale sign. And then also, what you can look for is live termites is obviously a good key here. And then the last thing is, like termite poop sometimes can look like birdseed, like it's little tiny pellets that are chewed up wood, basically.
On the flip side of this, though, when you guys are walking potential investments, or if you're a realtor walking it, besides looking for these things, you should also look for drill holes in the concrete. If you have a cylinder block wall, which is like your standard 12-inch block wall that you see on most foundations, concrete block wall, anything from like 1928 to usually in like 1998 before they poured foundations, you'll see these drill holes in every block.
Mm-hmm. They'll do about every 8 to 12 inches typically,
and they fill them back in with concrete, and you'll see them sometimes the inside or outside. Mm-hmm. Those are things that you guys want to look for, because that means at some point that house had treatment. Mm-hmm. And now it's good to have treatment, but you should also be looking for the amount of damage that was caused because of what was required for treatment.
Yeah.
So that's another part of that golden nugget.
Yeah, and then there's other things like carpenter ants can be as damaging, if not more so, than termites, because carpenter ants actually just chew the wood. They don't actually eat it. So they can just tear through it.
My personal house was infested with those last year.
But you can treat it. It's not untreatable. The downside is, like, if it gets into the framing and especially like the roof line, that's a problem. Yeah. So make sure you get those things checked out. So that was today's golden nugget for Andrea. Cool, man.
Hey, man, I love that golden nugget because I think tips like that are, priceless.
Well, they're a good reminder, because I forget about them sometimes too. And then I'll be like, oh yeah, that's, it's just a good reminder. Some of you probably already know this, but in case you don't, those are, make sure you Google it so you can get a good idea of what signs of termites can be. So,
well, and we've done so many episodes where we just talk about walking properties, what to look for. Mm-hmm. And I don't think we've ever really done a deep dive into that. So I think it was a great topic to hit. But hey, it's 35 minutes in. I think that the people listening are expecting an express version of this podcast. But before we do conclude, I would like to get into a couple reviews that we've gotten recently.
Let's hear them.
This one I don't know if we've done, but one's called Justin High, and it's Best Real Estate Podcast was the title, with our 5-star review. It says, funny yet informative. Guests are great and dynamic is great. We love that great podcast. Also, ABCD Cry to 1234 gave us a 5-star review and says, early congratulations on 200 episodes. Definitely a can't miss real estate podcast. We do appreciate that. Thank you. And then the next one is love the show from Brett 776688, and he says Ted and Owen do an amazing job with interviews, guests, and questions and content. They generally care about providing value to the real estate community. I think that's true, and I really appreciate that. That was really from the heart. And so appreciate you guys. Our goal with hitting 200 was definitely to have 200 reviews. So please get on your whatever format you prefer. Give us a 5-star review. On Apple itself, we have 130 5-star reviews. and 1 4-star review, which I love. But we still have a 5-star. You get on Audible. We haven't had a written review in Audible, guys, in 2 years, but we have like 40 some reviews on there. And Spotify, we'll have another 45-star reviews on there too. So appreciate the love, support. We want to become the biggest and best real estate podcast in the world.
That's right.
And we can do that with your support. So we appreciate you guys. But with that, Owen Dashner, we see us out.
On behalf of Aiden Bear, Ted Kaasch, and REIA Radio, I'm Owen Dashner, and you've been listening to the
Real Estate Rundown. Signing off. Aiden, do you know that Owen can rap?
Eminem, I can't freestyle. Eminem's my jam.
He can rap a little bit.